Well, good morning, everybody, and welcome to our Simply Tax Talks today. There's, as usual, no shortage of things to talk about, and we have some new developments here that we're going to break through today. And to help us do that, because we're actually talking about the infrastructure bill that the president signed yesterday, we have an extra guest with us today. So I'm going to invite all of our guests up today. We've got Tad Gunbauer, Yelena Vasovic, who you've seen from previous Simply Tax Talks as well. But we also have Nik Fahrer joining us today. So Nik, I want to welcome you, and I guess maybe introduce yourself. Tell us a little about yourself.
Yeah, thanks, Damien, for having me on today. I'm a National Office Tax Manager here with BKD, and really excited about talking about the virtual currency proposals here in this bill, and really laying the foundation in this infrastructure bill in this virtual setting. You see what I did there?
Yeah, I like it. I like it. You kind of layering it all together, right? And of course, we've had you on the podcast before as well, and you're always my go-to when it comes to this sort of stuff. So, yeah, I'm excited to have you on. So I guess before we jump in, I want to just invite everybody, as usual, from whether you're on YouTube or whether you're joining us on LinkedIn, use the comment feature. We're watching it, we're monitoring it. We'll get your questions answered live. We do some polling questions on YouTube, so be on the lookout for those. Can't necessarily do those on LinkedIn, but we'll get those into the comments as well. So I guess with that, yeah, let's start off with our top tax topics for today. All right, Nik. Well, you've already managed to cleverly, work in the virtual setting here and work on the tax puns, which are always my favorite. But I guess before we take a look at what was recently signed yesterday, I mean, very recent here, right? Recently signed into law here, and is now the new law of the land. Maybe you could just back up and tell us a little bit more about the situation, why we're here, why we're talking about digital assets and cryptocurrencies.
Yeah, great question. I think it's important here to first define what a digital asset is really, and the lawmakers here in this text broke it down for us. They went ahead and defined what a digital asset means. And so I'm going to read this to you all word for word. So bear with me here. So basically, a digital asset, as they define it, is except as otherwise provided by the Secretary. The term digital asset means any digital representation of value, which is recorded on a cryptographically secured distributed ledger or any similar technology as specified by the Secretary. You get all that? I know it's very wordy definition.
It's very wordy, but I follow you there. And I think that really seems like what we're zeroing in and figuring out what we're actually talking about here, right? And that seems to also be a little bit of the question for some that I've been talked to. Are you hearing that as well?
Yeah. So I think essentially what they're trying to get at here is really just focusing on crypto. In other words, okay. To put it very lightly and in more layman's terms, but crypto, your NFTs, that area is really what we're targeting here in this section of the bill. And I really want to also take a step back and understand why the heck did this even get into the bill to begin with. Obviously, they saw that there was an issue and it needed to get in there. So what was that issue? So if we take a step back and we go all the way back to 2009 when Bitcoin was first invented, largely accepted as the first widely accepted cryptocurrency that we know of today. The first IRS guidance for Bitcoin didn't come out until 2014. So you're talking about 5 years there where there was really no IRS guidance on how crypto was even taxed. So my guess is that those early investors and miners and those people that were already in the space before 2014 probably had no idea how to report this stuff and probably didn't report it at all. So the 2014 guidance was Notice 2014-21, which basically says that crypto is in fact subject to income tax and is treated as property for income tax purposes. And then, fast forward to 2017, so 3 years later after 2014, the IRS was granted a John Doe summons that was issued to Coinbase. basically a John Doe summons is the IRS getting access to Coinbase's taxpayers' information. And they got all the information for individuals that had $20,000 or more of transactions in that 1 year. So really opened up the IRS floodgates here. And then in 2019, the IRS started issuing what I'm going to call Series 6173 and 6174 letters to taxpayers that they thought had unreported income from what they call virtual currency transactions. So you'll hear IRS call it virtual currency, and in the bill here it's called digital assets. So pretty much the same thing here.
Yeah, I was going to say, I mean, that definitely introduces a little bit of, again, name confusion. I feel like, and I mean, that's why, I appreciate you reading the definition as it stands, but basically we're talking about the same thing essentially, right?
Yep. IRS likes to call it virtual currency. You'll see in the bill it's digital assets. I like to call it crypto, but okay. whatever your language is, it's pretty much the same thing here.
Virtually the same thing, perhaps, Nick?
Yeah. I like what you did there.
Yeah. Okay, so all right. So it seems like, kind of this buildup so far. I interrupted you on this buildup of what the IRS has maybe been doing here. So go on. Tell us more about kind of where things stand. And I think it is helpful to figure out why we're even talking about this. I guess essentially raising revenue here.
Yeah. So those letters that were issued in 2019, my guess is that they looked at the list of taxpayers' information from that Coinbase John Doe summons and said, and they kind of matched it up with their records and said, these don't really match up. So that's really what those letters aim to do in 2019 is give those taxpayers a fair warning saying, hey, we think that you have unreported income here. Please go back and review your records. In other words, go back and amend your return if you didn't. And then, in 2019 on the Form 1040, Schedule 1, IRS added a new question at the top of the Schedule 1 that basically asked if the taxpayer had any involvement in virtual currency during the year. And it's a yes or no question. So again, IRS trying to gather information on taxpayers that are involved in this space. And then in 2020, they took a step further and moved that question. Instead of being on Schedule 1, they put it on the very front and center of page 1 of the Form 1040. So it's right there for everyone to answer in 2020, and expectations that'll be on the 2021 Form 1040 as well. So IRS is doing a lot here to try and figure out who has unreported income. And I saw a recent study that said that roughly 15% of Americans own cryptocurrency. My guess is that 15% of Americans are not correctly reporting their crypto on their income tax returns. So IRS is really doing a lot here to try and crack down on this area because it's so unknown currently, and there's a lot of myths out there that people think that it's not subject to income tax. So IRS is really doing a lot here. So that brings us to where we are today.
Yeah, no, I appreciate that because I think that maybe that brings us then to the infrastructure bill and the provision that was included there. So I guess what changes under this bill and when does it take effect?
Yeah, great question. So it primarily amends 2 sections of the Internal Revenue Code. I'll start with section 6045. 6045 is basically the section that requires what we're now calling a broker to submit a Form 1099 to both the IRS and the taxpayer. And the IRS uses that kind of to match up their records with what the taxpayer reports on their income tax return. So if you're familiar with a broker currently that may buy and sell mutual funds or individual stocks, and you receive a 1099-B at the end of every year, that's essentially what the infrastructure bill is trying to get at with crypto. It basically amends that section to include digital asset as a specified security that should be reported on a Form 1099-B, starting with transactions effective January 1st, 2023. So reporting period would be January 1, 2024 for forms due February 15th of 2024. I also want to highlight here, Damien, that what a broker means in this scenario, because it's gotten a lot of attention here lately in the crypto industry. It's very broadly defined in the infrastructure bill. Essentially, I'm going to read this to you. It says, any person who, for consideration, is responsible for regularly providing any service effectuating transfers of digital assets on behalf of another person. And that's a really broad definition there, basically saying anyone that is helping transfer digital assets on behalf of another person. And I think what lawmakers were trying to get at when they wrote this text is really focusing on your exchanges and your wallets. But based on how it's currently written, you could interpret that to say, well, does that mean a miner who is basically confirming transactions on the blockchain, are they helping transfer digital assets on behalf of another person, or developers or other people in this industry? So stay tuned on that. I think my guess is that there'll probably be another bill passed or at least proposed here in the next year or so before this becomes effective to really try and narrow the scope of what a broker is.
Yeah, it's definitely received a lot of the headlines and some consternation, right, in terms of who's kind of drawn in there. But it sounds like at the end of the day, right, by getting this reporting into place, they're basically saying, hey, we know that there's 15% of Americans that own crypto, which by the way, are you in that 15%, Nick?
Yep, I sure am. I don't think it'd be fair for me to sit up here and talk about this stuff if I wasn't.
Yeah, you actually get in there and roll up your sleeves. It sounds like, I don't know, as we look at some of our group here, it sounds like most don't own it, don't necessarily have plans to do it right now, but most also aren't comfortable with it. So I'll probably make the plug here. Like I said, Nick, you were previous guest. It was episode 75 and then episode 82 where we kind of unpacked this a little bit more and talked about some of the history and some of the just technology wise what it is. So I guess that'll be a good resource. We'll put a link to those episodes in the comments here as well. But so I guess in terms of maybe if there was a top question you're getting right now, Nick, is there one? And what advice would you have for those that maybe are a little concerned about either how broad that definition is, or even just the reporting that's now going to start to kick in?
Yeah, I think the biggest misconception is that previous to this bill, there weren't really any exchanges out there that were reporting transactions on a 1099-B. And just because you don't receive a 1099-B doesn't mean that you have to or that you shouldn't report your income on your tax return. That's not necessarily a trigger to report. The trigger are the transactions. So just because you're not getting a 1099 now and probably won't for at least the next year until this goes into play, doesn't mean that you shouldn't be reporting it. So, and then Damien, here real quick, the second section that the bill amends here in the Internal Revenue Code is section 6050I. And basically what 6050I is going to require going forward, again, the same time frame here, transactions beginning on January 1, 2023, is going to basically say that digital assets are considered cash transactions, and cash transactions in excess of $10,000 are currently required to be reported on a Form 8300 is what it's called. And essentially Form 8300 is aimed at just collecting taxpayer information. And again, the matching concepts comes in again here. IRS wants to collect as much information on the front end to understand who's performing these transactions, and then it gets submitted to the IRS, so then the IRS can then match it up to if it's being reported as income on your tax return as well. So
gotcha. Yeah, and great talking points there, Nick. I mean, really, ultimately, the tax law didn't change. If you had a crypto transaction and you should have reported it before, you still need to. But now there's, I guess, increased reporting, which maybe it'll take those 15% that like you said aren't reporting, and really kind of tease it up and you're going to get a matching notice down the road because it's 1099B, and also those transactions are going to get reported. So yeah, definitely something to keep an eye on, and I know an area that's kind of continuing to evolve. So I have a feeling there's going to be a future episode again of you giving us further updates on the podcast of what's going on here in the crypto world. So yeah, I want to thank you for that and kind of the background here. So maybe what I'll do is I'll bring Tad back into the conversation here because in our last couple live streams here we've been talking a little about the ERC and the employee retention credit, because that's obviously another provision under the infrastructure bill that was changed. So Tad, looks like it's been terminated for the fourth quarter now, the ERC, at least for those that aren't the recovery startups. So now what?
I don't know. We're waiting for guidance, more on what we talked about last week about for those folks who hadn't deposited those payroll taxes. But I kind of want to take that maybe a step further right now. Again, specifically addressing those who were assuming they were going to be able to use the retention credit to reduce and have reduced their fourth quarter payroll tax deposits. There was no provision in the infrastructure bill that allowed for waiver of penalties. So we're going to have to at this point, pending any future notice, which I think will come, but there are some things you really need to do right now if you want to have the best case possible to get the penalties waived, absent any future blanket waiver. There's really two ways. Let's talk about what the penalties are first. And again, this is the failure to deposit taxes penalty, and the amount of the penalty is based upon how many days late you are in making your deposits. Given we're roughly 5 days out from the actual law being passed, although not completely signed into law, if you are anywhere between 6 and 15 days late on your payroll tax deposits, there is a 5% penalty of the amount that you have not deposited. If you are greater than 15 days, that penalty goes up to 10%. And if you wait until you get a notice from the IRS that you did not make them or that you still owe payroll tax deposits and you don't pay within 10 days of that notice, then the penalty goes up to 15%. So we're not talking about inconsequential amounts here, especially when, if you are a relatively large employer, these penalties add up really quickly. So there are basically two ways to get out of a penalty. One is to show reasonable cause, and the other is the first time abatement program. The IRS has a program that, look, if you meet certain requirements, and in other words, requirements are that you've had no penalties in the prior three taxable years prior to the year that you're in right now, you filed all returns timely, including any extensions, and you've actually paid the tax. And this is really, really important that you paid the tax in. Okay, the IRS has a first-time abatement program, generally no questions asked, they will waive the penalty. Okay, you have to take proactive steps on that, and if you have an advisor or a payroll company, they may be able to help you with that. So that's your first way out. Okay, and that's generally going to be probably the least painful way out and the most objective way to get it done. The other way is to establish reasonable cause. Okay, and I don't think there's any doubt in my mind the fact that you were following the law as it existed and you didn't meet them. That gets you partway to reasonable cause, but it's what you do afterwards. Okay, when the rules changed, it's what you do afterwards that would get you over the finish line. So as soon as you know that the rules changed, which were last week, when it passed, technically you could say when it was signed yesterday, what the IRS is going to look at for reasonable cause, what did you do? Okay, so if you immediately deposited those payroll taxes, you're probably going to be golden, and you probably establish reasonable cause, because that's the biggest thing is that, hey, look, as soon as the facts changed, I did what I was supposed to do. So I think there are still some things you can do, but the real key here is to make those payroll tax deposits that you did not make them as soon as possible, and that's going to get you the best case. Again, hopefully what's going to happen, Damien, is that they come out with a blanket notice that says, look, no penalties. You probably, like we talked about last week, you probably are not going to get a waiver on the interest, but that's going to be relatively inconsequential.
Yeah, no, that's great advice, and you get to think about, right, getting getting it taken care of at least, and hopefully we'll see that guidance. But yeah, those are I guess the actions you can take at this point in time, to be sure, I guess, if anything is to be sure at this point in time. I liked your answer though. I don't know. Yeah. What do you do about it? Right.
Yeah, like I said, I think the biggest key, I doubt that any guidance that's coming out now is going to allow you to defer making those deposits. I won't say shocked, because there's nothing they've done here that I can say hasn't, but it would be very, very surprising to me if they had any kind of provision there that would allow you to pay them in over time.
Yeah, no, I agree. All right, well, maybe we'll go to Yelena here next, because I mean, obviously there's it's over 2,700 pages in this thing. I mean, it's a pretty meaty bill, and we've talked about two of the most probably impactful tax side of things. But maybe if there's anything else you would add, and then of course, where are we with Build Back Better, and what are we going to see ahead for this week? So Yelena, I'll turn it over to you for those two things.
Yeah. So one more quick plug for something that may impact some of our clients is there is a provision in the infrastructure bill that reinstates the Superfund excise tax on chemical manufacturers and imports. These Superfund excise taxes expired in 1995, and they used to be used by the EPA as a way to clean up hazardous waste sites. And then that expired in 1995. Congress has tried to reinstate it several times since then. It was not successful. But this time they did reinstate the fund, and they're going to use the money from these excise taxes to pay for the infrastructure programs and spending in the bill. So that's something to be aware of if you own a company that manufactures anything related to chemicals or imports those. So if you think that could be you, contact your tax advisor, and we can walk you through that to see if this impacts you. That's going to be effective July 2022. So that's something to start looking forward to if that could impact you. That's about it for the infrastructure bill. It's been a quiet week otherwise on the Hill. Congress was out on recess. Biden was traveling. Yesterday, he did send the infrastructure bill, and he'll start a coast-to-coast, promo campaign for the infrastructure bill and to push the Build Back Better Act. The House does plan to schedule a vote either later this week or next week on the Build Back Better Act. But the holdup is everyone's waiting for the CBO to issue their cost analysis. So basically, I put together a report saying, hey, this is how much the provisions in the bill are going to cost. And there's some moderate Democrats that are saying, hey, we want to make sure this bill is completely paid for, so we won't vote until we see this report. And as of now, the CBO said they plan to issue something by the end of this week, so by Friday. And they said they definitely will try not to do it like Friday at 4 p.m. They'll try to do at the latest Friday morning. So everyone's kind of waiting around for that. But once the bill passes the House, if it passes the House this week or next week, it'll go to the Senate, and the Senate will then probably add their own provisions, make some amendments and changes, which means this could take us into December, maybe even January or February. So if you remember, Congress did extend the debt ceiling and funded the government through appropriations through December 3rd. And so that was their deadline to get everything passed. But now that the Republicans are not supporting any further debt ceiling increases, the Democrats will have to do that probably through the reconciliation process, which is what they're using for the Build Back Better Act, which means these two things can be combined. So the December 3rd date was originally everyone's kind of end goal, but the Treasury now says, hey, we actually have enough funding to maybe last us through December, January, maybe even early February without extending the debt ceiling, which kind of gives the Democrats now maybe a little bit more margin to work through December, maybe even to January or February. We really don't know until we see what the Senate does with the House bill that gets forwarded to them. So that's what kind of the current status of things is. Again, pretty quiet, but probably gearing up for some things to start moving here this week once we see the CBO report.
Yeah, kind of sounds like maybe calm before the storm or something. And it sounds like we're definitely we'll be keeping these live streams going here to help everybody digest it and the questions as we start to see more of it. But I have to say, the thought of the Friday night release on things kind of brings back memories of the Tax Cuts and Jobs Act, because there were a lot of late night releases there and that build up. And even with the Paycheck Protection Program last year, I guess, in the build up there were a lot of Friday evening releases there. So I don't know. I feel like maybe have a few Friday evening plans here. And we'll see what happens this week. But I guess overall, Tad, and I've said this before, I always go to get my takes from you when we get into situations like this. So let's head over to our Tad takes section and to wrap us up for today. Tad, not going to get much better than that, kind of the intro on Tad's takes here, right? So what is your take? There is just a lot to keep an eye on. Maybe it was a little bit of a quieter week last week, but it sounds like we're certainly gearing up for some busy weeks ahead. What should we be watching, and particularly, what are you watching?
Well, what I'm watching and BKD, we're very lucky or fortunate to have kind of some ear and voice on Capitol Hill. Travis, Lucas is one of the he's an attorney back there that we have engaged, and he's kind of our eyes and ears, and he's back up on the Hill tomorrow. And I mean, this guy has some really good contacts and gets us some pretty good inside information about what's happening, and more importantly, why it's happening and what he sees coming. He's been pretty well spot on, all through this process. And I know he's been, kind of quarantined, I think, for, a couple of weeks here, but he's back on the mend now, ready to go, and he's up there on Wednesday or tomorrow. And so hopefully we'll have some additional intel about what's going to happen here. It's one thing to read, kind of everything we see on the news and in the various reading that we get, but when you have somebody boots on the ground that has the contacts that he does, it really does get us some good information. So that's what I'm looking for. Fine, looking for the CBO scores, but again, you'll get some people twist it one way, some people twist it another way. The real key is these people who were waiting for that, is that if it doesn't come back the way that they anticipated, now what? And I think that's going to be a key. I mean, we're hearing more and more now that this could actually get pushed out till January. Fortunately or unfortunately, people may be seeing us every Tuesday morning through January. So, but that's where I'm at.
Yeah, well, that's a great point. And we've had Travis on the podcast, most recently episode 133, and agree he's got some good eyes and ears on the ground there. So, all right, well, we're going to get our top takeaways for this week to wrap things up here. All right, let's kind of go around the horn here. Maybe we'll start with you, Nick, as our guest here, our virtual crypto guest here. What's your top takeaway from the conversation today?
Yeah, I think the top takeaway is, if you're involved in the crypto industry, just make sure you're reporting something. I think that's most important here, and what the IRS is looking for. And then coming in 2024, be prepared to start receiving more 1099s and Form 8300s if you're involved.
All right, great takeaways there, and totally agree. Yeah, do something is a good one. Yelena, how about you? What's your top takeaway for today?
Well, I'm going to echo Tad and say watch the CBO report, because that's what everyone's waiting for. But again, although everyone's waiting for it, we don't really know what it means if it comes back and the CBO says there's not enough to cover the cost of these spending programs. And the moderate Democrats are saying that it doesn't mean they won't vote for the bill. They just kind of want to have all the facts. And so again, it doesn't mean that it's going to be an end all be all. It's just a kind of maybe a holding pattern for now until we see those numbers and then see what those moderate Democrats do. I think everyone's just kind of anxious to get it out of the House now into the Senate, because we realize that the Senate will probably hold it up again for a few weeks as they negotiate and make their changes. And so I think the Democrats are kind of seeing that, end of the year deadline that they set for themselves coming up here soon, and hoping to get this moving. But again, we'll see once the CBO releases their report and how the moderate Democrats are going to respond to that.
Yeah. All right. Well, Tad, I'm going to tweak the question for you. What's the over-under before or after 4 p.m. on Friday for the CBO report? What's your prediction?
Well, you know that I'm a betting man. So in this case, Eastern time or
we'll do Eastern. So 4 p.m. Eastern.
Yeah. So I don't know. This is a relatively non-political group, CBO. So I would say prior to.
Okay. All right, so maybe we'll still probably have some things to digest Friday evening.
Regardless, I
Yeah.
just think it's going to be there. Not that I'm going to delve into, how they do their calculations or whatever. I'm just more interested in the reactions and kind of what the initial take from people. I mean, obviously, the best thing is, watch the news shows on Saturday and Sunday. They are going to be packed.
Yeah,
okay,
absolutely.
with people trying to make their case. So if you want to see, where this thing may go, and I know it's fairly, as opposed to watching maybe some NFL or college games, to watch, the Sunday and the Saturday news shows. I know it's tough, but if you're kind of if you're watching this pod or this program, then you probably have a pretty good interest. So watch Saturday or Sunday.
There you go. There you have from Tad. So, well, thank you all for your insights as usual. And thank you as our audience here. Again, we're trying to find ways to engage with you differently, get your questions answered in real time, have this available as a recording. But we want to know from you. Give us some feedback. What would you like to see? Keep doing, change. Are there things that you'd like to see us cover? Let us know, because that's really what we're here for. So again, we really appreciate you joining. We'll be back again next week as it's a short week with the Thanksgiving holiday, but we'll be back in your live stream feed there as well. So thanks again. And thank you for watching.